Hello and welcome. As the Israel Iran conflict continues to intensify, we speak to senior economists on the impact that this will have geopolitically, economically, on equities, and on commodities. To, of course, decode the impact, I'm joined by Mitali Nikor, senior economist. I'm joined by Peter McGuire, CEO of AustraliaTrading.com, and someone who's been tracking the oil space for decades now. I'm joined by Sanchita Mukherjee, senior business economist. Thank you all for your time. Mitali, first to you. For those wondering about the Israel Iran conflict intensifying and wondering what really triggered this in the first place, the impact that this will have geopolitically and economically, what would you say?
So, firstly, I'd say, Sakshi, that, at this point in time, the situation is very, very, we're not very sure what the situation is actually going to be. Maybe in the next few hours, we might see it intensifying, or we may even start to see some pullback. So, I think it's just a very dynamic situation, and we have to wait and watch for it to unfold. So, but in such a scenario, we all know what these kind of conflicts mean for markets, what these kind of conflicts mean for the economy. It's much more uncertainty, and therefore the economy is always going to be adversely impacted, at a very global stage, because this particular conflict is something which is might be regionally contained, but might also intensify in the coming weeks. So we have to really wait and watch in terms of the scale that it takes. However, at this point in time, if we can hope that it remains contained, then definitely one major impact will be the rise in oil prices, because with this conflict, it will become difficult for a country like Iran to then physically ship out its oil shipments. Also, it will become important for certain countries, like for example, India, which has a very good relationship with Israel. It will be difficult for India to then justify the continued purchase of oil from Iran, which happens to be one of our largest suppliers. So I think a lot of these relationships at the international level would come under scrutiny. Of course, a country like the People's Republic of China might continue to buy oil from Iran. We have to see what happens. But Israel also has a very good relationship with China. It's not that it has any conflict with China. So I think in the next few weeks is when we will start to see these allegiances and clusters and groupings come about, even when or if the fighting is contained. The economic wars will continue, and that will be the bigger story on the geopolitics front.
Right. So intense times really there geopolitically as well as for oil prices, like you were mentioning. Peter, do you agree? We have seen oil prices surge over 10% in trade just today. The impact that this will have on oil importing nations such as India as well.
Absolutely, Sakshi. I mean, we've seen it up 12, 13% at one point during the day in Asia trade, and we're down now at around about 7.5%, 8%. I'm just having a look at the screen now. So it's given up some of those gains, but remembering it's just the dynamic nature of this and how it plays, and, how retaliatory Iran is going to be. We understand they've flown about 100 drones. Is there going to be an attack on Israel, on homeland? How does that play? And whether there's going to be other nations that start to gather, I think, to the likes of the Houthis, and what would happen there. The choke point that the Strait of Hormuz presents in the Persian Gulf, and could that really start to escalate? So I think the impact to oil prices could be significantly higher from here if we are to see continued war times, and if this is a protracted, battle, and if it doesn't get resolved in a very short period of time.
So where do you see oil prices hitting in the near term and the long term then?
Well, first off, if we didn't have this geopolitical concern, which has escalated in the last probably 12 to 18 hours, then I would have thought that you would have been trending south, and you would have been in the 50s, and probably, between the 55 and 63, 64 over this Q3 period coming up. But now that this has happened, and the framework associated with it, then if this was to be a protracted battle, and if this becomes far more aggressive, crude prices could certainly go up from here and certainly spike considerably. So it's all in the lap of the gods and how it plays.
Spike considerably, and of course it's all unpredictable is what you say. Sanchita, do you agree? We have seen gold rates also spike to an all-time high, cross that 1 lakh mark and hit a fresh high there just today. We've seen global markets plunge and react to Israel-Iran conflict intensifying. So your thoughts really on what this means for equities and for gold prices going forward?
Yes, absolutely, Sakshi. Thank you so much for having me in your show. As always, it's a pleasure. We are operating in a very heightened VUCA environment, which is volatility, uncertainty, complexity, and ambiguity. So, to sum it all up, yes, in the equity markets, whenever there's a VUCA sentiment, it's a risk off sentiment. Typically, during that time, gold as an asset class does well as it's a hedge against geopolitical tensions, it's a hedge against inflation. But what I rightly, what was being said by our fellow panelists over here, for India specifically, I mean, if we were to look at the indices, it opened very sharply red, but since then it has recovered slightly because, yes, we are net importers of oil for sure, but then we run as a country with an oil basket. So we have various countries from whom we do import. And right now, the focus for India is actually trying to get a lot more into being a little self-reliant where energy is concerned. But our diplomacy works towards ensuring that even in times of heightened conflict around the world, I mean, we have seen the Russia-Ukraine war, the Israel-Hamas war, all of that. The diplomacy channels work towards ensuring that the oil basket for India specifically, it is kept at a manageable level so that it does not impact our economy. I mean, we have a 1.4 billion population. So definitely sentiments on the equity market is risk off as it stands today. But given a long term, I think investors need not panic over this situation because this is a knee jerk reaction. I mean, we've been through heightened VUCA situation world over in terms of COVID and the various other wars, attacks, all of that. Given that the economic fundamentals of India stands very strong, one could look at, in fact, using this volatility more as a friend.
All right. Well, of course, using this volatility more as a friend, looking at fresh opportunities. Although we do continue to track the Israel-Iran conflict and how it is intensifying and the impact that this will have both geopolitically and economically. Thank you all for, of course, decoding the broad highlights for our viewers. Thank you for your time.
Thank you.
Thank you.